Yeah, sure. I mean, when I think about the dollar, we think about basically interest rate policy in the US, and I think that theme of divergent policy between the US and the rest of the world will continue. Early in that segment, we're talking about the neutral rate and where it could be. With inflation around 2.25%, if the Fed hikes another 3 or 4 times over the next 12 months, you have real rates around 1%, which feels about right at the moment. So with that, I would expect the US dollar to continue to have a little bit of a tailwind, and it should remain quite elevated against other currencies around the world.
So you're not concerned by some of the growth data we've seen recently, globally speaking, that has missed expectations, some signs that these trade tensions are starting to have a real impact on growth. You don't think that will be cause for the Fed to pause, not just I'm talking December, but going into next year?
I do think that's something that the Fed will start to look at. Obviously, domestic growth in the US is very, very strong. Unemployment's at a good rate, so is the GDP numbers. But then if you look at global growth, you saw Germany and Japan release GDP numbers more recently that showed a slowing economy. So I do think the Fed will have to look at that. On balance, though, I think the domestic factors in the US are so strong that it probably offsets any of the negative data coming out of the rest of the world, but should growth really slow down next year in the other jurisdictions, then you might see the Fed start to slow down a little bit. But I still perceive a, call it 3% Fed funds rate by the end of 2019.
Raymond, given this divergence expectation, you just walked us through that. I mean, is there anything in Asia that does look interesting to you? I know you've been cautious on some of the EM spaces, including for the currencies.
Yeah, look, I think one asset class that is obviously interesting is EM asset class in general, and particularly equities, right? I mean, that's probably the only asset class that's significantly below historical averages. And while you don't want to catch a falling knife, I can certainly understand some investors looking at that market, particularly in China, and starting to buy a little bit and average in over a longer period of time. In terms of the debt market or the FX market, we haven't done a whole lot there just because the US dollar is so strong at the moment. But should that turn, there might be opportunities there as well. So we're keeping our eye on it, but I think you've got to be very cautious in emerging markets because it's a very volatile part of the world right now.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.